I wanted to make another video about short selling stocks and share with you a bit of my insights. Also, I feel like doing this because I don't see a lot of people on the internet speaking about it. Most content is on the buy side. 3 stocks for 2024, 5 stocks to make you rich, 10 multi-baggers. And I believe there is a better opportunity for where we are now in the cycle to make money short selling. And I know that this can be taboo for a lot of traders and investors out there. But really, we all know the markets go in cycles. And where are we in the cycle? Well, the S&P 500 has been trading about flat the past 3-4 sessions, and it's trading near its all-time high. So we're definitely not at the bottom of the cycle. Are we at the top? No one knows. But for me, given the market situation, I can't really bring myself to buy any stocks because they're overpriced. All those good companies like Apple, Microsoft, Nvidia, Tesla, all the semiconductors, tech companies, they're all overpriced. And if I buy a company, it's because I like its fundamentals. All of those companies that are viable, they are trading a high multiple, and I'm not feeling it. I think there is more downside than upside. Because even if on Monday the stock market is going to go up, those companies, they already have huge valuations. It's going to go up to where? It's not a stairwell to heaven. So I think there is much more upside short selling. I believe this gives you an advantage because usually what is that you do? You buy low and you sell high. And this is the very basic than every economy. What do you do? What is your 9 to 5 job? What are you selling? Or what is selling the company that you work for? They are selling something. And usually a company like that, they buy the inventory and they sell it. Usually they buy by the bulk, whatever it is, and they sell it individually. But yeah, they bought. They need to put up their own money. The good thing about short selling is that you don't have to own the stock to sell it. If you think that a stock is going down, you can borrow it, you can sell it right away, and then you buy it again at a lower price. So pretty much it's the same thing of the buy low and sell high, but you first sell high, and then you buy the same thing, you replace it with the same thing at a lower price. Now, the good thing about that is that you don't have to use any of your own money. I think it's easier to come up with a stock that its price is going to go down, that look for the next Nvidia or Tesla and bet that the stock is going to go up. You see, if you go out on the street and you see a lot of people, you see a 20-year-old, a 30-year-old, now they could be healthy, but how do you know how long they're going to live? Maybe they're going to live another 60 years, another 80 years. It's a difficult task. But if you see on the street a 90-year-old with stage 4, you know that within 2-3 years he's not going to be around. Now, I don't mean to be obnoxious. I don't mean to be drastic that way, but I want to get my point across. For me, it's much easier to look for companies that are struggling than looking for companies that they're going to have a huge upside. No one knows who the next Nvidia is going to be. No one knows. No one has the crystal ball. Now, if you want to buy, I would suggest that you buy the ETFs. You're a tech guy, you can buy the tech ETF. You're a financial guy, you can buy the financial ETF, XLF, and there are several. The only thing that goes up is the broad market ETF, because no one knew that Nvidia is going to blow up. But now if you own the ETF, that could be the tech ETF, the XLK, or the S&P 500, or the large cap ETF. Now you wouldn't own that stock automatically. Okay? So I believe if you're looking at buying something, stick with the ETF. If you are looking at trading stocks, you have more upside by looking for companies whose stocks are going to go down. And you don't need any of your money to do it. That's the advantage. I think a lot of the upside of short selling is overlooked. I don't know why not more people do it. There are a lot of companies out there that they are a ticking bomb. I look at the fundamentals of a few companies, and if a company has a decrease in revenue, a negative EPS, to me, that is already a candidate to short sell. On top of that, if that company has a dividend obligation to make, and let's even say that it's got a higher payout ratio. Now, that really is stage 4. Okay, if a company needs to go to a bank and borrow money to make that dividend payment, they're not gonna stick around for long. And usually company like this eventually would cut the dividend. And that's why all of those dividend investors are gonna sell by the bulk. And that's when the price is gonna drop. And right there, if you had shortened that stock, now you can go and replace it with the same stock bought at a lower price. It makes a lot of sense. Now, I would buy those companies when there is a market overreaction for the upside, because you want to short sell it when the price is up. So basically, there are two parts to the job. The first one, work on a list of stage 4 companies. Then, at the right time, when there is an overreaction for the upside, the stock price goes up a lot. That's when you short sell it, and hopefully you can buy the same thing again at a lower price. And there you go, that's your profit. And you use none of your money. Now, I would stay away from the penny stocks. Also, my broker does not allow to short sell if a stock price is less than a buck. So I don't know your brokers, but I wouldn't even go there. I would short in the range anything over $10 a share. It can be less than 10, but I would say anything over $10 a share. Now it can be 100, 200. I mean, if you can buy a $200 a share, and you can write it all the way down, it's a trouble company. There are a lot of obligations, little money in the bank, in the huge long-term debt. I wouldn't mind shorting a good company, because the stock market is all about perception. It's all about perception. A company can have great fundamentals, but the stock price keeps going down because it's a hated brand. Okay, the stock market is not rational. In the very long term, yes, but in the short term, it can be very irrational. Now, if you are committed, you've done all your homework, and you know that a company's stock price is going to go down, you can bet on it. And don't let the daily price fluctuations get to you. If a company has very bad fundamentals, it's the same thing as that 90-year-old guy with stage 4. A stock price can go up. It can go way up of those companies because there is a lot of trading activity on those companies. I would also stay away from the most shorted. You can look it up in Google. Most shorted stocks at 2024, and you would come up with a whole bunch of companies. I would stay away from anything which is over 2025 percentage of the flow shorted, because then it's gonna be topic for the short squeeze, and then people are gonna buy into it only for the short squeeze, and you're gonna find yourself like the short sellers in AMC and GameStop. There have been a few. There are a few going on now. A price can fluctuate 30, 40, 50, 60% in 2, 3 days. You don't have to let that get to you. Now, I think that the GameStop was a lot more than that. I think it skyrocketed 30, 40, 50x. But if you are sure that a company is going down, it's easy to find those companies. Again, use stock screeners. Now, I personally use finviz.com, I believe, but you can use macro trends. There are a few out there. Use that one of the interface, it's more friendly to you. You come up with the same thing. So once again, I'm going to release another video to go into details and maybe a few examples on what I'm talking about, because it's really a no-brainer to me. And I'm really wondering why there are no more people doing it. Anyways, I thought that this was helpful, and happy trading and happy short selling.